Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and we've got somebody with us now who I consider a good friend, somebody who's been doing this longer than me, expert in mining stocks, real proponent of sound money, real proponent of the Austrian School of Economics. And I'm sure you know him well. I'm talking about Jay Taylor, his podcast, Turning Hard Times into Good Times. Jay, welcome back. It's great to have you on.
Well, it's good to be with you again, Kerry, and I consider you a friend as well.
Hey, well, we've broken bread together. We've hung out together at conferences. And hey, it's good to touch base with you again, see what you're up to. And look, God, it's been, we're going on almost the 8th year of the financial crisis, if you include 2008. Hard to believe. I mean, we're going on the better part of a decade,
Yeah, time flies, especially as you get a little older, Kerry. And it is really, it's sort of a distant memory now in the minds of most Americans, I suppose, that nearly total meltdown of the global financial system.
Yeah, the total meltdown. And the amazing thing is that if you talk to the average person, Joe Sixpack or whatever, not even Joe Sixpack, but, Joe middle class, who just does his work and just wants to be left alone to pursue his happiness and take care of his family and all that, basically thinks that probably most of that's behind him, knows that things aren't great, but thinks that things aren't so bad, right?
Mm-hmm. Yeah, I think the propaganda of the mainstream media has people believing that, or at least they're told that that's the case, and so they sort of accept it if they have a job. But the problem is, Kerry, as you know, that the number of people who have jobs continues to decline, and the number of people that have good jobs declines even faster. So there is a disconnect, and the middle class is Joe Sixpack. And the average person is having more and more difficulty, I think, making ends meet. And I think that's one of the reasons that we continue to see the velocity of money decline, because I think people are broke. The Keynesians can come along and talk about how all we need is animal spirits. We just need to believe. We need to be optimistic about the future. Well, that's all fine and dandy, and keep telling us how great things are on television to make us believe that's so. But when people look in their bank account and they don't have money to meet the rent and pay the basic needs, then they're not as inclined to believe the propaganda any longer. Wall Street loves it. It's been doing quite well, and I think that in the minds of Wall Street, there's very, very little chance of having any problems again, because didn't the Federal Reserve save their bacon? And they certainly did, but at the same time, really in the process hollowing out the middle class. And it's not a good story as far as I can see it. I don't know, if I watch CNBC all day long, or Bloomberg, or some of these, you listen to the cheerleaders all day long, and you kind of think, well, yeah, what are you complaining about, Taylor? Things are pretty good. And I guess if you're in the equity market, you made the right kind of investments, you've done very well. But that's most people don't have money to be in the equity markets, or to any great extent. So
that's the beauty of the Federal Reserve, of crony capitalism, is that it favors people who have capital and favors people who have assets. And that's not the middle class, right? That is the 1%, to coin a phrase.
Yeah.
And that's why they've done so well, because printing money inflated assets prices. That's really the simple truth of the matter.
Yeah, and the money that gets printed goes first to them and last to the people that we're talking about, the middle class. And so what we're seeing is that redistribution of wealth that comes through the printing press, and dilution of the monetary debasement of the monetary system. But Kerry, what concerns me most is that you talk about crony capitalism, But I believe that, and I think David Stockman made this point on my own radio show, that in fact we are looking at the demise of capitalism. Why is that happening? Well, it's because with zero interest rate policies and forcing huge amounts of money into the system, you are not allowing capital. You're not allowing price discovery of capital. So if you can't properly price capital, is it any doubt then that capitalism will be destroyed or reduced in its effectiveness and its ability to create wealth and do well for people? So I think that's the tragedy of this whole thing. And the Keynesians just don't get it. They think that you don't have to worry about debt. You don't have to worry about capital. They seem to be quite content in having the fox guard the chicken coop, so to speak, and have the Federal Reserve rule over us and decide how much of what we need. And of course, all the time, the members of the Federal Reserve Bank doing extremely well, getting extremely rich off of the fat of the land, the wealth, the real wealth that's being created by the middle class that is being raped and pillaged, in my view.
Yeah, great point. And, you don't price capital, which means you don't price risk properly.
Exactly.
And you don't have to look any further than the subprime auto market. Looks great. Sales numbers haven't been so good since before the crash, but you got 84-month car loans, right?
Yeah.
You've got people who trade in a car that they're upside down on, and the balance from that loan gets rolled into their new loan. So they're that much further behind the 8-ball. And then the thing comes off warranty and they've got to pay inflated auto repair bills. So yeah, that's Keynesianism at its finest, isn't it?
Yeah. It's a big lie. It's a gigantic lie. The notion that you can have something for nothing, and in the short run, I guess you can. You give people money. It's really akin to giving an alcoholic, giving him a shot of scotch and not expecting him to want more of it and drink too much, drink himself into the grave. Well, that's what they're doing. They're essentially causing Americans to imbibe on money and the pleasures of the moment without regard to paying for it sometime down the road. And the question, Kerry, is always, how much longer can this go on before something very, very bad happens? And I, would rather not think that way, but I can't get away from it. I just think that it's just so obvious that that nations cannot indefinitely continue to do this. Now, I suppose the United States, as still the world's lone superpower, can get away with things as long as the rest of the world will continue to accept the fraudulent dollars that are created out of nothing. But that too seems to me like that day may be drawing to a close. Certainly, we see competition from the BRICS looking to. They're not at all happy about the way the world is working out for them. Those growing, developing economies, the BRIC countries in particular. So they are setting up their own alternative to the dollar, a trading system, their trading arrangements, their banking systems, and so forth. Especially since the United States decided to freeze out, and I guess we haven't really taken away the payment system from Russia yet. But there's talk about the next bunch of sanctions would basically take away the SWIFT system from the Russians, and they see that coming. So they're looking to devise their own trading system amongst the BRIC nations anyway. So how long can it go on, Kerry? I'd ask you.
Till it can't go on anymore. A trend in motion stays in motion until it stops. Yeah. And, we've seen a lot of those in our lifetime. Oh, yeah. And, it'll keep going until it doesn't anymore. But I think back to our conversations a number of years ago where it looked like the dollar was really headed for the dustbin of history, Jay. And it was just a matter not if, but when. And here we are years later, and the dollar is going up in value. It looks like it'll keep going up in value. The euro is really the sick man of the world now. Not that the dollar is so healthy, but the euro is sicker by comparison. And it's kind of like, hey, I've got emphysema, but you have lung cancer. Who's better off? Right?
Yeah, that's that's right. And what we're seeing is that all the currencies have been declining relative to gold, at least since about the middle of December. I mean, last year, all the currencies except the dollar basically were declining relative to gold, and then from about the middle of December or so, even the dollar has declined relative to gold. And so I think, what that's telling me is that all the currencies are sinking, just some are sinking faster than others. And again, it's a con game. It's a confidence game, Kerry, And when does the confidence end? Well, collectively, I think it's in the process of ending. I just don't know, and you'll have gyrations, uptrends and downtrends within a basic longer term trend. If you go way back on the dollar, you'll see that the dollar is still in decline from its peak quite a bit. So, and again, though, that's measuring the dollar against all the other currencies. So I don't know. I think you really have to measure it against the eternal unit of measure and value and wealth, and that's gold.
I agree. And when we come back, let's talk about where precious metals are heading, where the dollar is going to eventually wind up, along with all the other currencies on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, we are talking with Jay Taylor. You know him well, been on the radio forever, and jtaylormedia.com is the place to find his various podcasts. So, Jay, we know that fiat currencies generally don't last much past 40 years, do they?
Yeah, I guess you could say if you look at our current currency, the dollar, it's really a different currency after 1971. So, it's pretty long in the tooth, actually. Up until that time, we did have an international currency, a one world currency, if you will, of sorts, at least, in that everything was pegged to gold until August 15th, 1971, when Nixon promised us it would just be a temporary thing to take us off of the gold standard internationally, and he blamed the speculators. Of course, the real reason was the United States politicians, and I would argue the military-industrial complex, wanted to get rich by redistributing wealth from the people that created into their own pockets. And but the excuse was, and at least the obvious reason was, that the United States was prosecuting a war in Vietnam and stepping up its own socialism under Lyndon Johnson. And so we had to print, the politicians, had they been honest, would have come to the American people and say, dear American people, you know that this war is very necessary in Vietnam. Dear American people, we love you so much and we're trying to help you. You know that socialism is a great thing. It's really good for all of us. You all love each other. You want to share together. And so we are going to tax you. And I'm sure that you'll understand this is a good thing. We're going to raise your taxes so we can kill a commie for Christ down in Asia, so we can make ourselves safe and keep the commies from sneaking in underneath our beds here in America. And of course, we want to help make sure everybody is taken care of from cradle to grave. So the politicians should have gone to the American people and said, I'm sure you understand, but this is going to cost you something, and you're going to have to pay for it, and we're going to raise your taxes. But of course, they didn't do that. Neither Johnson nor Nixon. They printed money, went into debt, and de Gaulle said, wait a minute, wait. We don't want your dollars. We see more and more of these things coming at us. Give us gold. We're going to send you $35. We're going to expect an ounce of gold back for every 35 of these junk paper things you're sending our way. And that's what he did. And the gold coffers were emptied, or at least they were starting to be emptied very rapidly. So Nixon just unilaterally defaulted on the obligation of the United States to honor the Bretton Woods Agreement and give de Gaulle his 1 to 35 ounce of gold for every $35 he sent back. And Kerry, I think that was the turn, a major turn for the worse, in my view, for America and our freedom and our liberty, because what that did then was give the government unlimited amounts of money to wage war and to engage in socialism and all manner of nonsensical activities. And of course, it's now redistributing wealth from the people that create it, the miners, the manufacturers, the farmers, the inventors, and sending it to the bankers and to the government. My goodness, if you've been to Washington in the last 10 years, and you see the spiraling complex of agencies and buildings and massive construction of office buildings and homes and things that are, I mean, it is a cancer that's growing that is made possible by this bastardization of money, basically the debasement of the U.S. currency, 1971 by Richard Nixon. And so, I like to say that if there was one president in my lifetime who was the worst for our country, I have to blame Tricky Dick, not for Watergate, but for what he did with the currency.
Yeah, and hopefully history will get something right and hold him responsible for that, because I wholeheartedly agree with you. That was kind of the beginning of the end. And, the inflation rate picked up from there. So many bad things happened. The decline in the standard of living of the American worker, all these things, just one after the other. Country really was never the same after that.
Yeah, you mentioned the length of time that currencies last, and I think though the U.S. empire essentially is able to probably prolong its currency through force to a great extent. But I think that what we're seeing now with the conflict with Russia and China, these large powers are saying, no, we're not going to just buckle under and let you run over us. And so, I think it's going to be very interesting to see how things work out. I look at something called the global U.S. dollar liquidity, which was something that Charlie Clow at Merrill Lynch pulled together during the Asian crisis a long time ago now. And I keep track of it every week and publish it frequently in my newsletter. And from 2008, 2009, well, let me back up a second. The global U.S. dollar liquidity is comprised of our, the base money that's created, the monetary base, and U.S. dollars in the foreign central banks around the world, the two combined. And right before 2008 crash, about 70% of this global U.S. dollar liquidity was held by foreigners. Now it's about 42%. So there was a precipitous drop. Of course, as we printed money to bail ourselves, the banks out in 2008, the percentage of global U.S. dollar reserves were held in the U.S. banks. And that has continued to decline. And I think it tells me that globally, the rest of the world is not interested in continuing to buy U.S. dollars. And of course, we're seeing that with China setting up all kinds of arrangements with countries, even our closest friends like Canada and Australia and New Zealand, having separate arrangements whereby they will not accept dollars anymore for trade, but it will be a bilateral currency arrangement between the Chinese renminbi or yuan and the Canadian dollar or the Australian dollar, what have you. So, but of course, there's also setting up arrangements to trade with countries that the United States has long considered rogue. And I find it interesting, Kerry, that rogue nations are defined as those who do not want to accept U.S. dollars. So it's, how long can this go on, Kerry? I just don't know. And I guess that's the big question. But I think people need to be prepared to believe that it can't go on forever unless you believe the laws of nature have been repealed.
Yeah, and then we get back to precious metals and probably your best defense, right?
I can't see it any other way. I mean, I think that there's some very ingenious things going on now with Bitcoin and the linking of gold to Bitcoin, which I find very interesting. But yeah, as far as I can tell, it's pure unadulterated wealth is gold, and it retains its value. And, here's the other thing, Kerry, you have countries now that actually have negative, not just real interest rates, but negative nominal rates. Switzerland, of course. And I think maybe it's Finland or one of those Nordic countries that has, people are going there because they see their currency is holding and retaining value, whereas the Western nations are in an accelerating rate printing money, or at least trying to. And so why would you not buy gold? I mean, a long time the enemies of gold have said, well, you don't want to own the gold because doesn't pay you any interest. Well, now you're actually being charged to put your money in a Swiss bank account. You're going to lose some of it just for the privilege of them storing your money for you. And again, it's a fractional reserve banking system, which means it's not even your money. You're a creditor. You're an unsecured creditor to the bank, and they have your money to use and lose. And if they lose it, too bad. But you are losing it just by virtue of putting it in the bank. I mean, better to put it under the mattress, of course, if you could keep it safe there. So, to me, the handwriting is on the wall. I don't see how gold doesn't rise very dramatically. But, I do think, Kerry, that there are games that are being played in the paper markets. And I have a weekly thing on my J. Taylor Media, a weekly podcast with David Jensen, who is getting quite a bit of coverage now from a lot of different websites, gold-oriented websites. But David really delves into the mechanics of the gold market manipulation and the paper markets. The amount of paper, gold, and even more pronounced in silver that trades relative to the amount that mined is mind-boggling. And so it just shows you the huge amounts of manipulation. People own a paper, some sort of paper denominated, well, let's say GLD, for example. They think they actually own gold. In their minds, they do. But in the futures markets and so forth, the forward contracts and all that, people think they actually own the gold, but they don't. And if they wanted to take the gold in delivery, there just simply wouldn't be enough around in the warehouses to satisfy that interest. It's like 1% of the people take delivery on the LBMA and on the COMEX. Anyway, these are things that David and I talk about. I just think, Kerry, that Greenspan understood it very well, that the government has to keep gold out of the hearts and minds of individuals. It can't allow people to start thinking that it would be wise to trade their dollars in for gold. If that were to happen in mass, people that listen to your show and my show, they are doing that to an extent. But if the masses of people started doing that, it would be game over for the statist. Yeah. And they don't want that. So I think what we see happening, and I don't know to what extent, the individual traders are just trying to make money out there. They're out there trading gold and on the short side or the long side, whichever way they think they can make money. I believe that's true. But there's no doubt in my mind that there is a bias against gold because, these guys can create inventory that they can sell on Wall Street with keystrokes of a computer, a little bit easier than going and digging gold out of the earth. So there's definitely a bias to keep people believing in the paper con game.
Oh, yeah. I wholeheartedly agree with you. It's just a question of how long they can keep the daisy chain going, because at some point, the people buying, their paper gold going to ask for delivery, right?
Right.
And, there has to be some connection between the paper price of gold and the physical price and we've seen instances in the past where that connection gets broken and then there's chaos in the markets. Anyway, Jay, that's going to be the upcoming issue that we're all waiting to see when it happens. So, Jay, best place to find your work, your podcast?
The best place to follow everything I do is J. Taylor Media, Jay Taylor, Taylor media.com. And from there, they can, check out my newsletter if they're interested, Chen Lin's newsletter. Also, my weekly radio show and podcast, which are both accessible at J. Taylor Media.
Excellent. And you'll find the links, as always, the show notes to this interview on financialsurvivalnetwork.com. Don't forget to subscribe to our free newsletter as well. Jay, it's great catching up with you, and we won't let so much time go by again in the future.
Excellent. Thank you very much, Kerry. Nice talking to you again.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.